Everyone, thanks for that, Cleo. So I'm Ben. Good to be with you guys today. Hope everyone's keeping safe and sane in lockdown. Just going to share my screen, and if you guys are able to just pop into the chat, just let me know that this is coming through okay with the audio as well. That would be great. Perfect. Thank you. Great. And awesome to see so many people on the line today as well. I think crypto is something that's getting a ton of attention in recent times. So yeah, good to a lot of missed messages and yeah, sort of difficulty around unpacking this space. So today we're talking cryptocurrency investing 101. I'm going to take you through some of the basics of crypto, how it works, the key things for you to be looking out for, and the things that you need to do to make smart choices in this space. So as we're going through today, please feel free, pop any questions into the Q&A. I'm going to get through those as we go, and also we'll have a bunch of time at the end to do that as well. Guys, just before I crack in, shout out to General Assembly for hosting today. Those guys are up to some great stuff, so check out what they're about. And at the legends over at Self Wealth as well. Those guys are personally, I've used them. I think their product is great. Really good UX, which is important, and a solid product as well. I know that these guys are moving into the crypto space as well. So check out what they're about and watch this space as they progress, which is quite cool to see. Guys, before I jump into the presentation as well, please don't rush out and make any life-changing decisions off the back of today. Would strongly encourage you to seek out personalized advice before rushing in. A lot of sort of potential risk in this space, and I'm going to talk a bit about some of those today, but yeah, it's something that you should be doing anyway. So guys, look, today I'm chatting crypto, but before I get into it, some of the common challenges in this space and for people with their money more broadly is that I found everyone's situation is unique, but there are some really common challenges that people do have when it comes to their money. The first one there is information overload, and in particular in the crypto space, that there is tons and tons of information out there, and everything is just a keystroke or 20 away. But it's almost like we're drinking from the fire hose, and really difficult to know who to listen to, who to trust, and what the agendas might be driving things behind the scenes. The second is that people are really struggling to find balance between getting ahead at the rate that they want while able to live the lifestyle and have the peace of mind that they want. And then there's this constant sort of fear of missing out and the fear of effing up, essentially making a mistake that costs you a bunch of money. And I've found that they lead people to get what we call stuck. And it's stuck, not always stuck doing nothing, but sometimes just stuck doing the same things that you've been doing in the past. But what that really means is that you're missing out on the opportunities to be getting better results and getting more out of what you've got. So what we've found, and today we're diving in on crypto, but I'm going to talk a bit about how that fits in with your broader money strategy. And what I've found through helping a bunch of people in this space is that there are these three elements that you need to get right. For anyone that's been following our presentations for a bit, you might have seen me talk about this, but essentially the structure, strategy, and solution. So your structure is all about making it easy to save and manage your money, and making it clear how much money you have to work with when it comes to investing, saving, debt reduction, buying crypto, whatever your investments, asset building, and those sorts of strategies are. And that ties in with the next element, which is your strategy, which is all about getting clear, having clear goals and targets in place. I think that this ties in really well. It should tie in really well with the crypto investing wave as well. But understanding the different pathways it can take you from where you are right now to whatever that ideal position is that you want to be in with your money, and then knowing what your next steps are and when they're happening, so that you feel like you've got that confidence in what you're doing. And then the third element is your solution. So making sure that you've got the right investments and products to back up your strategy and give you that reliable, consistent progress over time. And importantly, that you avoid the chances of downsides and setbacks and those momentum killing mistakes. What I've found is that if any one of those three elements is missing, then it ends up dragging down on the others. And what it means is that you're yeah, you struggle to get the results that you could. If you're missing a good structure, even if you've got the other things in place, you're working with a leaky bucket. If you're missing a strategy, you're leaving money on the table, peace of mind and confidence on the table. And if you've got bad investments, you end up blowing up your cash. So the power of the three of them together is much more than any one individually. And I'll talk a bit more about planning around that as well. So look, guys, the basics, but starting the basics of crypto, we're seeing a massive increase in the cryptocurrency market space in the last little bit. Huge rises over time, and I'll talk a bit about some of the drivers behind that. But there's a ton of increase, ton of attention, and a ton of opportunity off the back of it if you use it in a smart way, and that's all what we're talking about today. One of the things we're seeing is that we're getting adoption by market heavyweights. Big financial institutions have started using crypto as part of their payment system, investing system, and that has led to higher demand levels and certainly an increase in the value. And increasingly, cryptocurrency and digital assets more broadly are difficult to ignore. In fact, they can't, in my view, they can't be ignored anymore. The things to think about, though, is that there are all different types of cryptocurrency, and this is increasing sort of month by month, where you've got pure cryptocurrencies themselves, we've got tokens, there's NFTs, there's securities, and a whole bunch of weird and wonderful things. And I think that one of the key issues that I see with people in crypto land is that they sometimes put everything into the same basket, but they're all different things which have different risks, considerations, and strategy opportunities, I suppose, that sit around them. The next one is that you've got to understand and manage your risk. And look, at the end of the day, risk, when it comes to investing, when it comes to crypto, risk is what makes you money. Buying crypto has risk attached to it. Buying shares has risk attached to it. Property has risks involved, but doing nothing has risk involved with it as well. So the key to being a smart investor and an investor that has the right risks to make them the money that they want, but avoids the risks that are going to stress them out or cost them a bunch of money, means that you've got to first identify where are risks coming from when you invest. And I'm going to talk more about some of those today. But where are the risks coming? What are the risks? Where are they coming from? How can we manage those risks? And all risks, well, the majority of risks can be managed in different ways. You can manage the ups and downs risk or volatility risk by making sure that you're never forced to sell at the wrong time by keeping a bit of a cash stockpile behind you, or you can manage liquidity risk by using a platform that has more liquidity than others, or there are ways to manage a lot of those risks. But ultimately, there's generally speaking some level of risk that's left over with all of these, with all investments. And the key to making smart decisions and having the right risks for you is understanding what is important to you when it comes to risk, and what risk is acceptable to you and what risk is unacceptable to you. And then you want to put into your portfolio, put the things in there, put the right risks that are acceptable to you, and avoid avoid the ones that aren't. So understand and manage risk. And look, I wanted to unpack some of the drivers around markets and markets on cryptocurrency in particular that you should be aware of if you're thinking about investing your hard-earned cash into this space. The first one is that a lot of cryptocurrencies, and when helping people invest and with their decisions around investing, we tend to focus on the bigger cryptocurrencies, the ones like your Bitcoin and your Ether that are seen as more blue chip investments. And we do that in a similar way to the way that we help people when we advocate share type investments. We tend to stay at the blue chip end of the spectrum as well, because they have different risk profiles. And I'm going to talk about that in a bit more detail. But in those markets, the cryptocurrencies in particular are quite tightly held. And what I mean by that is that there's only, like with Bitcoin, for example, there's a certain number of Bitcoin out there. And, some of it has been mined, some of it hasn't been mined, but there's a limited supply. And then because it's unclear who actually owns all the Bitcoin, and one of the things that we do know, though, is that the earlier players in the market have pretty significant holdings of crypto. And what that means is if you've got a market of a certain size, but say, and just for example, that half of the market is held by one person, then it's going to mean that the variations when the other half of the market is getting bought and sold is going to be significantly more. So it's just something that drives we see big fluctuations and big volatility in cryptocurrencies over time. That ties in with the next piece, which is about, and I appreciate there's a bunch of words here, that the depth of the platform that you purchase and trade your cryptocurrency on has a big impact on how much the currency prices move for different investments. And why this is important is that cryptocurrency, and just using Bitcoin for an example, it's based on blockchain, but based on blockchain technology. But for a crypto buying platform like Coinbase or BTC markets, for example, each of those platforms has their own blockchain that they hold cryptocurrency onto. So basically, if you're on Coinbase, your Bitcoin is held with Coinbase, it sits on their platform, or on their blockchain rather. If you're investing with BTC markets, your crypto sits on their platform. And so while the total value of the whole Bitcoin market might be $800 billion or whatever, if BTC markets has 50 billion and say Coinbase has 100 billion, that you would say that the depth is different. The depth of the market is different. And that means that if someone's looking to sell $1 million on one platform versus another platform, they're going to what we call move the market more on the platform that has the smaller holdings, because there's less depth to the market. So that's why it's important when you're choosing, like if you are investing in cryptocurrency, that you do your research on which platform is the best one for you to hold your investments onto, because depending on what your investing strategy is around cryptocurrency, then it's going to impact how much your fluctuations move over time. I see that there's a few questions coming through. One of the things, and it's sort of hard to know exactly where 101 sort of sits with cryptocurrency, because there's a whole bunch of different levels of understanding. But the question around blockchain technology, and I must apologize in advance to any computer engineers on the line, because while I'm really good with spreadsheets, my detailed understanding of coding in the computer machine is probably not as much as other people that might be on this line. But essentially, blockchain is decentralized computing, and there's basically a whole bunch of computers, if you think about the computers around the world that are processing transactions on the blockchain, essentially. So there's all these movements that are going on, and then the blockchain is basically the independent verification of those different transactions, which provides decentralized security, as opposed to, you think about in contrast to a financial institution where they have their central system where all transactions are processed on their one system, or the central bank system where there's one system which is reconciling all of the transactions. With a blockchain technology, there's multiple independent parties that are verifying all of these transactions in a decentralized way. So I hope that one was helpful, but please keep those questions coming. Another one of the drivers that we've got here is the media. The media has a big impact, and the meme trends as well. We see that any statements from people like Tesla's Elon Musk can move the market pretty considerably. So they can. It is because it is tightly held, and it is a bit of a momentum type investment, that any sort of statements in and around the media can impact and cause some pretty wild variation in pricing. One of the other market drivers, and certainly the way I see it, and I know that a lot of people have different views around this stuff, but I think that especially Bitcoin, as the original cryptocurrency, that there's an element of it being knowing that there's a limited supply or a finite supply means that people want to hold these investments, and I think that trend will continue into the future. So I'm going to dive into some the different crypto strategies that people could think about, or that people tend to typically follow. And I think it's an important distinction, because when people think about buying cryptocurrency, there is a few different ways you can do it. Now, one of those ways is you buy your what we call blue chip, and blue chip just means bigger, more stable type investment. So Bitcoin and Ether would definitely fall into that bracket. And all cryptocurrencies have significantly more volatility than, say, a general share investment. But with these investments, one strategy is that you buy the blue chip shares, and then you hold them over time, and you hold them like you would a property investment or a long-term share investment. Day trading is another strategy, and I think there's a lot of people that see the appeal in swanning around in their PJs, retiring at 26, just trading cryptocurrency. And look, I say that jokingly, but I don't want to take away from that. I know that there are a lot of people that have been quite successful with that sort of trading. There's an equal number, if not a greater number, though, that have blown up their cash and ended up back at square one. So something to be aware of there, but that is a strategy that that you could consider for this, or that's available, I suppose. And then the other main way that people buy and invest into cryptocurrency is using impact buying, and that's where different cryptocurrencies and different digital assets have different societal causes. That's why a lot of them were created or do exist, and for some people that it's, yes, you could view these digital assets and cryptocurrencies as an investment, but it also, potentially the bigger purpose is to support the societal cause that cryptocurrency or digital asset has been designed to support. So look, in terms of planning around cryptocurrency, then there are some key steps which we need to go through, and I'm going to unpack them. But before I do, I just want to step you through a situation which talks about the power of time when it comes to investing, and how compounding impacts your investment returns over time. And then I'm going to talk about how that fits in with your overall, what your cryptocurrency strategy what the considerations are for your cryptocurrency strategy, and how you might want to see how that fits with a smart money strategy more broadly. So this example that I've got here is all around the power of time and compounding interest, as I said. But what's driving this is to say that, so the background is you start with $0 today. So you start an investment portfolio today with $0 to begin with. And then you look to save a bunch of money and then invest that. Now, the investment that I've got here is not cryptocurrency, but it's just the share market index overall. And the figure that I've used for the growth projections is the 20-year return on the Australian share market as at about a year ago, which was 8.7%. At the moment, it's currently higher than that because we have seen a big run up off the back of COVID, but 8.7% is the 20-year return. It's probably the 25 to 30-year return is close to that mark. And while the past doesn't predict the future, in my view, that it's around that 8.7% mark that should be reasonably be expected from a share portfolio into the future. So how this works is that you invest into a share portfolio, and I'll talk about how that ties in with crypto in a sec, but invest into a share portfolio and then reinvest your dividends and allow the money to grow over time. you don't, in this scenario, need to invest any additional capital other than the money that you start with. So what this first example is that if you save up and then invest $50,000, then and just leave it bubble away, reinvesting your dividends for 10 years time, you get some growth on the shares, you get some income on the shares, which is reinvested. And then in 10 years time, you should have roughly $118,000. After 20 years time, you see that if you just leave it bubble away to keep growing, then the growth would get to about $283,000. 30 years is $673,000 and 40 years, $1.6 million. Now, guys, just worth noting here, and I appreciate that there's a lot of numbers on this screen, but this is starting with $50,000 today and just letting it bubble away over time. So over 30 years, you've more than 10x the money that you've put in, and over 40 years, you're like 30x pretty much. So you can see that compounding impact is escalating over time. And then I've just put another couple of examples. What if you had 100,000? You could see that grow to $3.2 million, 200,000 or 400,000 that you could save up and then invest to get to these pretty astounding numbers off the back of this. Now, the reason you might be asking yourself, well, why are we talking about share investments in a cryptocurrency presentation? And the reason that I'm showing you this is to say that when you invest into, when you set your investment strategy, you want to figure out how much risk do you need to get to end up in the position that you want to be in over time. And I think that the trap that a lot of people fall into when it comes to cryptocurrency is that you feel that, and it's natural to think that every investor wants to make as much money as humanly possible when they invest. But the key to being a smart investor is understanding how much risk you need to get to where you want to be. Not necessarily how do you go out guns blazing and get as much as you possibly can and run a 50% chance that you'd blow up all your money and get to the starting point. Because you can see from this that just allowing your momentum to build and avoiding the setbacks and mistakes is something that can be a really powerful way to grow your investments considerably over time. So I'll talk about how you plan, and I've got our process here for planning with your money. This is the process that we take people through and we help them plan, but it's essentially the same planning process that anybody needs to use if they want to make smart decisions and make it happen essentially. So the first step here is focus. Excuse me. So the first thing you got to do is focus on what's important to you. And here it's like, what's important to you? The question that I like to ask to tease that out is to say, hey, if we were having a conversation 3 years from today, for you to be completely blown away with where things were at, what is it important to you? What is it that you would want to see, feel, or have happen? Then from there, you need to understand all of the different moving parts and the things that are going to impact your plan over time. So what money do you have coming in? What money going out? Where's it going? Is that where you want it to be going? Then what's your regular savings, your current assets and investments that you've got? What crypto do you have? What property? What debt? And getting a picture of the lay of the land in terms of the numbers and the financial stuff. The other important part of this clarify step is to unpack what we call your lifestyle baseline. So your lifestyle baseline is to say, well, what are the things that you absolutely want to have the ability to do if you choose to do them? So if you're thinking about maybe getting married, starting a family, having kids, schooling, childcare costs, all of those things that you want to have the ability to do if you choose to do them, not to say that you necessarily will do them, but if you want to do them at the time that you want to do them, that you want to have the ability to. So you map them out, and that creates a baseline over which you can start layering different investments and financial decisions. So with you then look at, okay, well, what makes sense? And when it comes to investing, there's only really 6 categories of investing, which is you can save money in cash and cash type investments. You can invest into shares, managed funds, ETFs. I put them all into one bucket. You can buy cryptocurrency and digital assets. You can buy property, And there's a bunch of different ways you can do that. You can pay down debt. And then the sixth one is cranking your superannuation fund. Now, guys, it's not rocket science what these options are. It's the same 6 options that are available to everybody. And the 6 are, the cryptocurrency is a new addition to this in terms of the more accepted asset class worlds, I suppose. But essentially, these ones are the most common for the reason because they're the most effective. So the key is not like what's the super secret sources to say which of the 6 asset classes or investments do we go into, but it's really what's the right combination of the options that can give you what you want. And the key to that is that once you've got your lifestyle baseline mapped out, then you go, okay, well, what if I save all my money in cash? What if I put it into shares? What if I put it into crypto? What if I bought a property? When is it possible? What does that mean for what my situation looks like? And that's really this strategy piece. So it's like, let's put some scenarios up and say, what does it mean for your ability to live the lifestyle that you want today? What does it mean for the ability to live where you want to do what you want over time? And then what does it mean for you, how your assets are going to build into the future? So where people go wrong with investments and cryptocurrency, I liken to property investment in one way because the markets can be volatile and also because property can be and is really expensive to buy and sell. And shares are the same broadly as well. That the key to making smart investments in this space and getting the results that you want from great investments is knowing that you're never forced to sell investments at a time that you weren't expecting. So as long as you've got a good strategy in place, and I'll step you through the other steps in a second, but as long as you've got a good strategy in place here, you will never be forced to sell your investments at the wrong time. And therefore, so long as you choose good investments at the front end, you can let good investments do what good investments do over the right time frame, which is make you a bunch of money. So understanding that strategy and how they fit together. The other part of strategy is getting really clear on where you're headed based on those different financial outcomes, because everybody wants piles and piles of money, but you've got to go, well, how much money do I need and how much risk am I prepared to take to get there? And that ties back with that previous numbers that I was showing there as well. Once you've got the strategy, once you set on what the broader strategy is, then part of that is making sure that you're comfortable with and that you understand the different layers that sit underneath your strategy. So the best way to run your banking and savings strategy, the structure that I was talking about before, crypto investing, how do you choose? What does it look like? Share investments, set up your investment strategy. Are you active? Are you passive? Are you an index ethical investor? And in each of the areas, because then you ultimately end up with a plan and then happy with all of the elements that sit underneath. Now, the next step is putting it all down into a crystal clear action plan where you go through, okay, what are the 27 steps that need to happen to turn this great plan into great results? And from there, you've got the roadmap to run on essentially. We want to try and automate then as much as possible, because the more that you can automate, the less you have to do. You set your default strategy as success, and then you can just follow the bouncing ball and allow your strategy to happen over time. But that's not all of the story. You do need to, it's great to have a great plan and have the track to run on, but we know that unfortunately life, investment markets, crypto markets, etc., they don't follow the nice, neat, straight lines that go into our plan. So you need to look at your results over time and make sure that you are able to get the results that you plan for, essentially, and that you're refining your strategy to make sure that it continues to be the best one for you. So there are 3 things that you need to make sure are consistent with your plan or remain consistent with your plan once you've set it. The first is what's important to you and how you feel about what's going on with your money. The second is what's going on with your markets, investments, what are the results that you're getting over time. The third is what's going on in the world, investment markets, crypto markets, property markets, share markets. And if any one of those 3 things changes in a way that that becomes inconsistent with the plan that you've set, then it's time to update your plan. So you need to then wind back and go through the steps again to make sure that you get the right result. Now, it is something that there's no set and forget these days, because the world and everything around it is changing so quickly. But it is that this process gives you a good starting point But ultimately, you're going to be clear on where you're headed. You're going to know that you've got all the right things moving in the same direction underneath, and then you're going to have confidence to follow the bouncing ball. And ideally, when you're checking in on yourself, getting that motivation for you to continue to follow what you're doing. So this process, we're a little bit biased because this is what we do, but found it super effective to cover those bases and ultimately end up in a position where you're getting what you want, but that you're confident to follow it through and pull the trigger, which is where a lot of people fall down. So guys, some mistakes to avoid when it comes to money and crypto as well. Not setting your financial foundations is important. And I think that cryptocurrency, like startup investments and speculative penny stocks and meme stocks, they have a lot of appeal in that everybody wants to get rich. Everybody wants to make a whole bunch of money in a short space of time. That's the dream, of course. I'd like to do that as well. But I think investments like that, they have a place, but my view in it tend to be when we're wanting to give people certainty that they're going to achieve the financial success that they want. My philosophy and our philosophy is ensuring that people have the right foundation set for their money. And what I mean by that is to say that make sure that you've got a level of wealth, assets, investments that are sitting there that you know are a bit more boring than the exciting world of cryptocurrency or startup investments or penny stocks or whatever. But have that there so that you know that can bubble away. And when it grows to a certain point, you can then say, well, okay, now I'm going to carve off a certain percentage of either my regular savings or my portfolio to invest in things that I see as more interesting or have more potential upside. I've spoken to tons of people that have their entire portfolio invested into cryptocurrency. And look, some of them may have made like a whole bunch of money in the recent past, but I think that the volatility that you experience through that and not having the peace of mind that you do have a core assets that are sitting there bubbling away is a super stressful thing. So I would suggest that as you're going through your asset building journey, making sure you're making the right moves at the right time and the right things for the stage that you're at. And I think that you make sure you got that foundation set. It's going to give you more confidence if you really do, or when you really do choose to carve off part of your portfolio for stuff that you see as more interesting and potentially having more upside, but knowing you're doing it in a sustainable way. Not being clear on your targets, that's a really big one for us as well. And that's why I showed with that planning piece to actually extrapolate out and say, okay, if you keep doing what you're doing, then you know what you're working towards, and you're going to be clear on the different pathways that can get you there. So knowing, okay, if you want to be financially secure, what does that mean? Does that mean you have to replace your living expenses? Okay, great. Let's do a calculator. So look at a tax calculator. You might say, I want $100,000 a year in passive income or $200,000 a year in passive income or whatever that is. Now, the rough rule of thumb with this stuff is to say that if you want a portfolio of assets and probably more traditional assets than cryptocurrency, given they tend to be non-income producing investments in a lot of cases, is that a portfolio of assets or wealth should be able to give you an income of about 5% each year without eating into capital. What that means in human words is that if you've got $1 million in an investment portfolio or a share portfolio, you should be able to generate an income return of about $50,000 each year, and without eating into the $1 million capital that you have in your portfolio. Beyond that, like once you've got that, then you can sort of back solve and say, okay, well, if I know that I want $100,000 a year in passive income, maybe then you need about $2 million in wealth to get there. Then your strategy and scenario planning can, what it does, what you can see is, when am I going to get to the $2 million mark? If I buy shares, buy property, buy crypto, do a combination. So getting clear on that target, and then it gives you something to work towards, because if you don't have a target, the other part of it is that you really don't know where you're headed, and you don't know if you're doing well or you're not doing well or you're going behind. And that's important for your course correction over time. Making choices in isolation is another one. It's interesting. I just got some questions from someone off the back of another presentation that we did the other day, and they had all these questions. It's like, do I pay down my mortgage or buy shares or buy crypto? Do I, or do a combination? Do I reinvest dividends? Do I, the other question was something specific about, how much to borrow for a property. And what I said in my response, and I went through each of the things in turn, was to say that any one of those things can be right and it can be not right, but whether it is right or not really depends on you and your overall strategy and where it fits, how it fits with how you feel about stuff, how it feels with what you want to do, how it feels with where the world is sitting at the time. So where you fall into the mistake is saying, and I get this question all the time, if I've got $10,000, what should I do with it? There's no one answer. In fact, there's a million answers to that question because there's a million different sets of considerations to sit around that. So instead of looking at your choices in isolation on their own, look at them as part of your broader, bigger picture and make sure that you can make sure that they fit in a way that's consistent, and then you end up with all your stuff working together to the same direction. Getting the wrong advice, and this can come in a bunch of different forms. There's no doubt there's a lot of misinformation online, a lot of social, like the psychology, the herd mentality is not the right thing, but a lot of groupthink that happens in all investment markets, but it's particularly predominant or particularly prevalent in the crypto space, I think due to the, I suppose, proliferation of online chat rooms and the fact that a lot of people that invest in cryptocurrency are generally people that are more tech savvy or maybe work in tech or maybe understand tech better. But that groupthink, if you're someone that's getting into it, it's easy to get caught up in that. And it's not always factually based. There's so much psychology that impacts our investment decisions, behavioral psychology. We've got involvement bias. We've got information bias. There's all of these things that they don't just impact crypto, they impact all share markets. And that's why we see, people buying when things are high, selling when they're low, all of the problems that sit around that listening to those online things, you no doubt can learn some stuff, but take it with a grain of salt, because know that these things can really creep in and mean that you're not always getting as balanced a viewpoint as you might want to make smart decisions. The other place that you get wrong advice, mates, people tend to have an opinion, but have they done it successfully, and do they actually know what they're talking about, or did they get lucky as well? Again, or having different professionals. It can be wrong advice in the property space. I see a lot of that as well. When it comes to financial advice, you have some people where they don't have a model to support decisions like cryptocurrency, saying, hey, this is crazy, it's whack, don't do it. Or if they do have sometimes if they've got conflicts of interest, then that can influence them the other way as well. So I think if you're working with a professional, and obviously I'm a bit biased because it's what we do, but working with people on a fixed fee for service basis means that to them there's no conflict if you invest all of your money into shares, into crypto, into property, into cash, into any combination, and then you get a more balanced viewpoint. So guys, I'm going to wind into Q&A in a second. So I can see that there's a bunch of questions there. For anyone that's got questions, just fire them through. But look, in terms of next steps, I'm going to talk you through this model that I call the Four Futures model, which essentially talks about, I can tell my animation is not nailing it, but it talks about your progression from where you are today to this point in the future, and basically says that in this future state, you're going to be in one of four positions, essentially ranging from really bad to really good. The things that differentiate where you're at in the stages is how quickly you're getting ahead with your money, your ability to live the lifestyle that you want, and how you're feeling about what's going on with your money. So for people that are right down the bottom, that they're making no or really slow progress, they don't have peace of mind, they've got those niggling thoughts in the back of their mind that there's stuff that they're missing out on, and they make some financial progress, but it often comes at the sacrifice of getting ahead financially at the rate that they want. And then the comfortable and the very technically labeled killing it stage for people is where you're basically crushing it financially, building rapid momentum, and no limits on the lifestyle or personal choices that you want to make. And I think when people think about their progression with their money over time, they think of it like a straight line, but because of the compounding impact of time and money, it is essentially a curve. And, if this is you here and you're not quite on track to end up in a position that you're happy with, then you need to do some stuff and what we call jump the line to get there. Now, that might mean that you need to take some action on your investing, to rebalance your portfolio, to be smarter with your tax, to make sure that your super is doing what it should be, or any other combination of stuff. But take some action, get on track. And once you do, you just need to then follow the bouncing ball and keep on track. But the longer you leave it, the more things go on. And this can be because you've not taken action. It can be because you've taken the wrong action and suffered setbacks as well. But if you have to start again, or you have to make bigger jumps of the line in the future, it becomes more and more painful, and this can become impossible. So this thing is, it's essentially my pep talk to say that no matter where you want to get to, the earliest time to start doing that is now. And the sooner you jump the line, the sooner you're going to, the easier it's going to be, the smaller the sacrifices you're going to need to get the results that you want. Thank you. So before I jump into Q&A, I'll leave you with this quote from Derek Sivers. It talks about, if more information was the answer, we'd all be billionaires with perfect abs. And it talks to the fact that, in particular in crypto, is so common that there's so much noise and information out there that it is like we're drinking from the fire hose. And what you don't need is more ideas. What you need is to take action, because it's action that will start getting you results. And the tip to taking action is focused knowledge and education. So you guys have taken a great step here in building your knowledge and getting on the front foot with this stuff. Great to see. We love seeing that. But now it's like, take action to start making it come together. Guys, I'm going to jump into Q&A in a sec, but for anyone, this is the sort of stuff that we help people with. So for anyone that wants to learn more or have a chat, we do these intro crypto focus calls where essentially talk through your opportunities. We talk about crypto, but we talk about money more generally as well, what the opportunities are for you. You get a bit of no BS Q&A and understanding your next steps and how to get started. I just popped the link in the chat there, but it's bit.ly/chat-GA, all case sensitive. So if we can help, would love for you to get around that. And guys, I am going to jump into some questions. So I've got a bunch of questions here, and thank you for guys in jumping in. Is SafeMoon a safe investment? I'm not sure if that's a trick question or not, but look, I think that time will tell on that one. That we've seen a proliferation of this stuff in recent times. When I mentioned before that when investing in this stuff, we tend to look for the traditional, not traditional, but the investments that have a good track record, so a good longevity, so that they've been around for a little bit of time, that they have a decent, that they're big, because big creates a bit more security, a bit more bigger market, more market players, bigger depth, which gives a bit more peace of mind as well. So yeah, and then making sure when you do buy it that you buy it on a good platform and stuff. But if you stick to those things, then you're going to be more into that blue chip space. To be honest, we stay out of the speculative investment space. It's inconsistent with our philosophies, and it's inconsistent with how much risk I feel that people need to take to get great results over time. So yeah, but thank you for that question. I suppose time will tell. Eric has a question for the share market. Do we have a general time frame of 7+ years to smooth out investments for up or downs? Do you see the crypto market having the same time frame of 7+ years? That's a really great question, Eric. Yes, that's entirely true, that with the share market, we do normally suggest having that time frame of 7+ years. And the reason for that is when you see a significant market decline, then you want to have the ability to hold your assets until the market recovers, so that you can know that you're never forced to sell your investments at the wrong time. But yeah, with crypto, it depends on the cryptocurrency firstly, but with Bitcoin, we've seen that I get the sense that it may be a little bit sooner, although to be smart, when we help people with it, we normally suggest the same sort of time frame. Now, having a suggested investment time frame of 7+ years doesn't mean that you need to hold your investment for 7 years. It just means that you need to have the ability to do that. So if you buy and your investments are way up and you made a bunch of money, you can cash out at any time, obviously, as well. So yeah, I think it's a bit shorter, but playing it safe, you'd be a little bit longer. I got a question about market platform depth. Can you please explain again? Yeah, so look, I get that this one is a little bit complicated, but let me say it in a different way. If I was to start a crypto trading platform today, call it Ben Nash Markets, and then I get a few people together and they put their crypto onto my platform, and say there's $10 million worth of crypto sitting on my blockchain on my platform. Because I to run my own platform, I need to have my own blockchain, which is essentially the code that the people that trade with me put their money onto. Then the competitor, say they have their own blockchain, and say they have $100 million on their platform. So they have 10 times as many people, 10 times as much money on there. Now, if I had someone on my platform and they wanted to sell a big chunk of their crypto, there may not be enough buyers to buy it at what the market price is. And therefore, if they want to sell it, they might have to accept a lower price. So if you're forced to sell, and there's these crypto instruments out there that can force people to sell at weird times and all that sort of stuff, you're forced to sell at a lower price point, whereas on the other market, you might be able to get a better return. So it does get a little bit complicated, but it just means that if you stay with the bigger players, then you're generally the difference between how much you trade for and what the market is across the world is going to be smaller. Hope that helps. Hi, I buy on Coinbase and store on Exodus. Is that a good way to do it? Look, that's a good question, Sabina. I would tend to, with this stuff, if you stick to Australian-based companies, there's a lot of companies that are based in foreign jurisdictions, which I think are going to be hard to track. In fact, I've seen a few nightmare stories with this stuff in the past. So if you stick with the recognized players I would probably stick to Australia, although America you'd probably say is just as secure. That's important. And then with the digital wallets, making sure that you're storing on reputable companies. And again, I would stick to Australia because I think that's the safest way to do it. Jessica asks, what is the impact of what's the example of impact buying? Well, it's where there are certain like cryptocurrencies that are specific for say it's fostering economies in the developing world. And if that's a cause that's important to you, then you might hold cryptocurrency there to support the movement that they're doing. That's what and like Bitcoin in its purest form initially was about how do we decentralize financial market institutions. Now it's sort of evolved to be a bit of a behemoth, but the people that got on in the early days, they were supportive of that cause. Hope that helps, Jessica. Can you explain why crypto might be a good hedge strategy? That's an interesting question, Carlos. One of the things with crypto, and I think one of the things that's been driving markets in the last little bit is that interest rates are at all-time lows. The share market's pretty flat. The property market's up. And so there's limited alternative investments for people, and young people in particular, to invest their money in. So I think that that's leaning more people to invest in cryptocurrency and driving the price upwards. Now, you would probably see, I'm guessing, and time will tell with this, but see similar trends between financial market downturns and cryptocurrency upturns. In fact, there's an argument that we've seen this with COVID, that markets went down, crypto went up, and then it kept going up and up and up and riding that wave because the momentum gets behind it. So yeah, hope that one helps, Carlos. Seen a lot of questions here, guys, so thanks for that. Keep them coming through. I'm going to push to get as many of these as I can. Katrina says, when you talk about market depth, does it mean Selfie starts trading in crypto and suit beginners and holdups until time depth builds? Look, it depends. I'm still waiting to see all the ins and outs of the details around that. So I think we need to watch this space because there's a bunch of different ways to do it. One thing that we're seeing a bit, and I know that there was just a whole lot of submissions that were going through to ASIC, which is the Australian Securities and Investment Commission, around the regulation of crypto in Australia. So I think that might have an impact as well. Another interesting development, sort of in an aligned way, Katrina, is that in Canada, they just started releasing cryptocurrency ETFs, which I think, in my view, I think that's a great move because it makes it easy and accessible to people to buy crypto. The market cap of the crypto ETFs in Canada went up to $6 billion in like a month or a couple of months or something like that when they kicked off. So I think we'll see, given that how popular crypto is for investors, but how the challenges that exist around investing in it, my view is that we'll probably see a lot of tech developments that will support that going forward. What type of transactions are carried out on blockchain in order to mine crypto coins? That's a great question. And again, the depth of my technical expertise on this is somewhat limited, but essentially how Bitcoin mining works is that there's a lot, the computations are happening on the digital network to register transactions of other, like in cryptocurrency space, of other like Bitcoin transactions and transfers, to validate them, to make sure that they're legitimate, that they're real, that they're not fake. And they're really complex calculations that require pretty extreme computing power. Now, when one of these transactions occurs, there's actually a race that, it all becomes public information where there's a race to, for people to, whoever supercomputer solves it the fastest, then they, and the transaction is mined basically every 10 minutes, I think it is, but then they release one block, and then they mine they are given like a newly minted piece of the cryptocurrency. So this stuff is happening day in and day out all around the world, and it's how all of the transactions are validated across the markets. It gets pretty complicated, but that's essentially the high level. Hope you found that helpful. Got a question around with the planning process that I was going through. When transitioning from plan, what platforms are good to assist with automation? Look, I think it can be automating your banking strategy is great. Having an investment platform that allows you to invest in a way that is automated as well. So where you can invest regular amounts on it over time is good. I know that there's some emerging players in this space on the crypto side where you can allocate a certain amount and it just invests regularly. Bank accounts, investment accounts, automating paying down your mortgage as much as possible, and then potentially trying to automate the reporting of your progress over time as well so that you can track that. Got some questions. Who do we reach out to create a stable portfolio in all of these silos, stocks, property, crypto? That's from F. It depends really on how you want to tackle it. But this is what we do with clients. We're a financial advice business. So I'd say that for financial advice businesses that work in the space that you're in, or with the sort of people that are like you, they would help with that. That's what we do, the planning piece, figure out what's right, wrap it into a plan together. You can go and choose like a crypto specialist, a property specialist, a stock market specialist. That's an option as well. I think you want to just make sure if you go down that path that you've got all the three people, like it's all working together so that you're not making those decisions in isolation. But yeah, essentially a good financial advisor would help with that. Got a question about impact buying from Diana. Does Pivot have a list of societal courses I can choose from? Look, I don't, but it's a good question. I'll see if I can find something and send it through in the follow-up notes that we'll send over off the back of the session today. So thanks for that, Diana. Question from Jason. Major issue with cryptocurrency investing is handing tax return in Australia for me, or using Coinly or crypto tax calculator. Gets complicated, manage transfers, staking, decentralized transactions, fee rate, fees, private wallets. How do you recommend we handle tax management, and will Self-Wealth build in tax reporting? Look, I can't speak for the Self-Wealth guys, but I'm sure if you send them that question, when they get there, they'll be able to answer it for sure. Interestingly, that I've noticed, I got actually contacted by someone the other day, which was a crypto tax specialist. and they specialize in all of this stuff, and they have different levels. So for people that are right into crypto, and they even had different packages for trading and stuff around there, that they had their systems in place to reconcile those transactions. And when I got contacted by one, I realized that there was actually a number of them. So might be worth you looking up that crypto tax specialist and do it, because I think that the ATO will crack down at some point. And because a lot of these transactions are digital and able to be verified, I think they will do that. So you want to make sure that you're reporting things in the right way to the ATO. Just going to take a couple more questions, guys, before we run. Don had a question about implications of global warming with banks, computers, mining. Yeah, to Elon Musk's point, I think that stuff, I think, is positive in a way, in that if we were to, given that renewable energy sometimes is that there's this constant energy which is not always fully utilized, I think potentially transitioning that to renewable energies, I think, would be great for the planet. Yes, it is heavy computational, and because there's a lot of places in companies that don't have the best ratios of like fossil fuels, non-fossil fuels, that I think it is a bit of an issue. I don't know that it's an issue that's going to cripple the market or anything like that, but yeah, it's an issue nonetheless. So good question, Don. Guys, we are out of time. I've got a ton of questions there. Look, we are going to send over a note off the back of today, just with the follow-up, the slides and any questions. So if there are anything specific, reach out to us, jump on one of those calls, and yeah, check out, we've got 4 more events coming up in this series. Check it out on the GA website, and yeah, look forward to seeing you at the next one. Thanks, Cleo.
Thanks, Ben. Thanks.